seeing the Treasury when issued 5-year TIPS yield as spot 6.32% for the $16 billion auction. So the when issued 5-year TIPS.
Good evening, everyone. Good afternoon, good evening. Welcome, welcome. Hopefully everyone had a good trading morning so far. Plenty of stuff going on. Markets are actually moving today, which is definitely... oh, man. Is that nice to see? It feels like a breath of fresh air at this point. Before we jump into the charts, and there is quite a bit to talk about, let's make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list to be notified every time one of these videos comes out. Along with that, in the email, we cover a bunch of stuff that we don't have time to talk about in the live stream, and that's everything from stocks, options, crypto, Forex, you name it. If it's moving, it'll show up in there at some point, so make sure to grab a hold of that if you haven't done so already. Along with that, click on the live Trading subscription and trial info where you can sign up for a free 3-day trial in the room, and that way you can kind of hang out with us for a couple days, get an inside look into how we approach the markets, see how we trade, ask some questions, just kind of hang out with us. So a really good way to get your feet a little bit wet if you haven't done that already. Now, right up front, I'll apologize. I have the my neighbor has a tree cutting crew out there and just hogging down trees. So I tried to keep the dogs in another room kind of locked away for a minute, so hopefully they won't go too crazy, but you might hear some humming of this crazy grinder thing in the background, but hopefully that's not too loud. Taking a look at the news for tomorrow, first of all, the economic calendar relatively sparse. The only news that we have for tomorrow is the Canadian news, and for the most part, you know, it's not necessarily a bad thing. I do like to see at least some news to work with. But for the most part, well, tomorrow Canadian news is about it. 8:30 is when that comes out. Core CPI and core retail sales. The core retail sales forecasted at 0.4%. Nothing for the U.S., nothing for really anybody else. A bunch of small, medium, that's it. So there's not a whole lot that we're going to have to worry about going into tomorrow's trading. In terms of news, at least, fingers crossed, you know, the markets will at least kind of keep going. We'll have to wait and see. Now, looking at the charts, we've got quite a bit of movement going on. First of all, the one big one, obviously the euro, we have finally broken back down through that level of support, 24.010. That's not before bouncing all over the place. Lots of levels of support and resistance, which we can easily see on the 5-minute charts. Kind of an oddball scenario, right? We have that level of support and resistance. We were talking about the bounce here. That worked out beautifully. We hit resistance. They started coming off of the highs. They're just kind of bouncing back and forth. Buyers pre-buying into that support. And you can see even after it hit way over here, after the level has been used how many times, it still ended up bouncing there for a little bit before breaking down. So now likely this area that was support at 24.010, given that we have a convincing breakdown, will now act as resistance to try to push the market a little bit further. So in the in the faster time frame, could be in the next 5 minutes, might not be until tomorrow, but I am looking to use 24.010 as resistance instead this time around, now that we have broken pretty aggressively down. We have also broken below the rising wedge support. That is out of the way. We can't really do a whole lot there. We could potentially widen it out once we get a little more info, but until that happens, we're really just kind of stuck on where it was earlier. Possibility of maybe a falling wedge top coming down into play as well. We could even go from that most kind of previous high there, and we can see that the top is kind of fanning its way lower. Overall, kind of an interesting scenario. We did have a big engulfing bar, so again, looking back at this engulfing continuation reversal type of formation, but the difference here is that this big and bear engulfing candle wasn't very strong. Notice the last engulfing candle, really strong. It had a close near the lows, at least in the bottom 20 or so %. The big bull bar here had a strong close. The big bear bar here had a strong close. This one over here was basically a giant doji. So all bets are off when it comes to that one. The ECR type of candlestick movement that we're looking for, that doesn't apply to something like this. Now we are seeing, that engulfing candle into, I guess you could call it a continuation. It did close a bear bar. I don't know how much you want to really say that that's a strong bear bar, but it did close bear. So we are seeing continuation to the downside, trying to break below these lows. A lot of buying pressure coming in down here. Likely both sellers taking profit as well as buyers trying to find a trap low to buy into to push the market back up. Because again, don't forget, this is a big range and buyers will be trying to buy as cheap as possible. Now the next major level of support is back down at 23,235. Now that we've broken below 24,010 with some conviction on the 5-minute charts, we're looking for a little bit more, a pullback, hit, and then turn back lower again on the faster. We're looking at the 5-minute chart in that case. But looking for a little more continuation to the downside, see if they can grab that 23,235 over the next, that might take a little while. That might take about a week or so. A couple things that might be in the way as well. Major swing low support. That is the same area that they trapped before. Wouldn't be a surprise to see buyers defend that. Aside from that, though, everything else is looking pretty good to the downside. We might even have a new shallow level of resistance coming into play on all of this weakness inside of there at 24,255. But, looking at the faster time frames, looking to play that 24,010 to the downside, see if we can find some selling pressure there, and maybe get a decent move down. So we'll drop that down there. Keep up the good work. Love how you break it down. Awesome. Thank you. Appreciate it. Over on gold, we have a relatively weird sort of move going on here. Now, gold for the most part has been very back and forth. I don't think that surprised anybody. And we had a beautiful bounce off of that initial support right there that we were looking for. Remember, we had those two orange levels. The one above, was the one that we were looking at last night for a bounce at 48.1. And sure enough, it had a really nice bounce off of there. Now, it may not look like much on this chart, but when we zoom into a faster 5-minute chart, you can see that bounce right there. Beautiful rejection off of that level all the way back up to retracing about 70% of that drop before continuing back lower. And even then, when it came back down, they tried using it as support. They used the next level as support, and now they're using it as resistance and support again. There's obviously still something here. So I don't necessarily want to lose sight of 48.1, but the stronger level now that this is already held at 48.1 is going to be at 46.6. Zooming back out to a 4-hour chart here. The big thing is we're still stuck in the range, right? This is the same thing that we had down here and up here. We went into this range. Buyers tried breaking out. They failed. Sellers tried breaking out. They failed. Buyers tried breaking out. They even gave it another shot here and then ended up failing. So the overall really the anticipation is that we're going to try to break down again, and it's probably going to fail. A lot of buyers obviously didn't like that follow through. They began exiting. They might have been lucky enough to get something out of it. Otherwise, sellers see that weakness and they pile drive it lower. Well, guess where they're going to be taking profit? Back at major support, and that's that horizontal green line at 44.8. So really, we're just playing a range. Nothing has changed. It's the same range. So looking to buy low, sell high, stay the heck out of the middle, because the middle right now on gold is a nasty place to be. You do not want to play with the middle on gold. No, not it's not my cup of tea right now. So gold overall, still a range. Looking to buy low, sell high. Preferably looking to buy low. The next area of support is going to be down here at 40.2. Over on crude oil had a big old rip to the upside. I was looking for a zone above to hold, and it completely destroyed it. Just way off the mark on that one. Just went ripping higher up into a new level of resistance. And this level of resistance at 69.06, this is back from 2015, okay? I had to load up 1,500 days on the chart just to be able to go back far enough to find resistance above us. That's how long it's been since we've been here. So if we zoom way far back, you can see this resistance starting to come into play. Oh, there we go. Now we're starting to see where this resistance is coming from. So the resistance that we tested today is coming off of 69.06, and that is that aggressive bear leg to the downside with continuation. Same here, same here. Every time we had a little bit of a bull lift and a push down, sellers will likely defend that. And even though it's been 3 years, they're obviously still paying attention to it, right? That's the strength of those types of levels at 69.06. Good amount of resistance all the way back from 2015, pushing back down a little bit further. This is a very, very aggressive bull leg up. Whenever you have that strong of a bull leg up, the anticipation is that the first pullback that you end up getting, buyers who miss that initial rally are going to be jumping in and slamming that market back to the highs. And that, to me, is what this little pullback is here, that one little bear bar. But that might not be it. We might also be looking at this as a possible pullback for more continuation up. So I don't necessarily think the buyers are done. We are very heavily overextended to the upside. The buyers have they've gone above and beyond what they needed to do. And whenever I have a bull channel that's breaking above, right, that just screams exhaustion. That takes a lot of effort to get, and even more effort to keep it there. And that's where the problem really lies. A lot of the buyers who've been buying into those lows, buying the trap bottoms, buying major support, regardless of where they've been buying, they spent pretty much all the ammo on this rally up. So if it does get one more push to the upside, I have to assume there's going to be a gargantuan amount of sellers there looking for, a reason to fade, right? So I accidentally moved that. I don't think that's where that was. Was it here? Yeah, close enough. Big level, good enough. So I'm looking for a level of resistance at the top, 69.55, to come into play and give us something to work with here on crude. Let me try. That orange level's in the wrong place. I just moved that level too. How many levels can I mess up in one go here? Get that there. That level of supports was right there. There we go. So, I mean, really, that's kind of the idea here, is that the buyers will probably be buying into the pullback because they've been waiting for that, well, you know, maybe they missed the move or whatever, but they're going to be buying into the pullback, expecting the market to want to retest those highs. Resistance at 69.06 has tested, and that has held. That is now a dash dot level, meaning that it has been tested and proven. And then the next level of resistance is a retest of the highs, assuming that all the buyers are going to be taking profit there, and new sellers will also be entering the market, assuming that it's not going to go much further. So 69.55, or maybe, you know, 10 ticks above, 20 ticks above, 55, 65, 75 in that area is going to be a big block of resistance next. And then the S&P. Ooh, man, the S&P caught a lot of bear pressure to the downside. We're finally breaking out of this chop and slop gross price action. I mean, look at this. This is a 4-hour chart. It looks like you're staring at a 3 in the morning 5-minute chart. It's just horrendous price movement here. We're finally getting a breakout down from that. And one big level is this level of resistance here. Notice how they could not get above that area. Every time they tried, it ended up as a wick and failed right back down again. Tried breaking out, failed back down again. Over and over and over again. So that area is obviously a big area of interest at 27.12. I really wanted to see the S&P get up to 22 3/4, up to 26 or so. Didn't quite make it, missed it by just a couple points before rolling back over. It happens sometimes. The overall objective now on this sell move is down to the next support at 79 1/4. And potentially, given the fact that we have an ascending wedge, right, a rising wedge, they blew out of the highs of that, just like we were talking about a bull channel breaking up. Not very likely that sticks around, so I am anticipating a correction down and potentially an overcorrection down into that cluster support. There's a lot of stuff stacked up there for support. We have an unfilled gap at 26.59 We have major support coming in at 56.75, and we have horizontal 4-hour support at 56.25. Lots of stuff there, all building in one place, you know, around 1 or 2 points from one another. That's going to be a pretty big deal. So looking for the sellers to want to continue down, probably stall out on 79.25, but I would like to see them break out and continue down to the next major level after that. I mean, you know me, I've been talking about the S&P and wanting, you know, the sellers to dominate this market for a long time. I think the rally that we've seen over the past 2-3 years is historically very unhealthy without any pullback at all. We need pullback for the market to continue to all-time highs, and I think this is just a necessary evil that we're seeing, and I would love to see the S&P crash all the way down to fresh new lows back into, you know, low 2500s. That said, obviously we are a couple hundred points away from that. This could be the top. It might not be. Chances are it's probably not. Trying to call a top usually isn't the easiest thing in the world, but we've got to be getting pretty close if the sellers are going to take it down to that new low. Again, you know, I think it's going to be healthy for the index markets to see that kind of correction down, but for right now, sellers are dominating the intraday market and they are pulling down hard, looking for the sellers to want to continue this movement so that they can jump back in on maybe a small little correction, something like that. They are getting a little bit exhausted though. Remember, exhaustion looks like this, right? Small bar, slightly bigger, a little bit bigger, and you can kind of feel them just overdoing it, right? They're pushing too much. And a lot of times when that happens, the market has to correct, and those exhaustion corrections usually are a little bit bigger than you anticipate them to be, which is why I really want to see this blow off down into the support so we can catch a nice reversal back up for a little bit. And then from there, you know, maybe it rolls over for the next couple months back down to new lows. And then, of course, the bonds. We can't leave out the bonds. The bonds collapsing to the downside, just absolutely smashing lower. We had this 3-push wedge bottom. There were a couple other levels of support along the way that we had marked up, and it just completely ignored them all. Went flying to the downside. It broke through the channel lows. That was anticipated because of this overextension up here. Likely going to see an overextension down here. But then it starts running into a couple problems because, well, this is getting some pretty heavy emphasis to the downside. You know, if we look at an equidistant breakout, they broke above the channel by about this little square amount. We should be seeing it break down by that amount. And sure enough, we are seeing support coming in there. We also have 4-hour horizontal support, which helps. But this is the equidistant area, right? That's the equidistant support level that we should be looking for on this breakdown, right around that 4-hour green level at 143.15 or so. And it's getting a nice bounce. So really what I'm looking for is not necessarily the bottom of the move. Again, my job isn't to call tops and bottoms. My job is to catch about 60 to 80% of the move in between, right? So in this case, we're likely going to see some buyers building in here. Both sellers taking profit and new buyers trying to find support down here to try to lift the market back up. I would prefer to wait to see a first bounce and a secondary bounce to look for possible longs. That way you're not coming in a little too early, being early to the party when you're trying to catch a falling knife. Not really a situation I want to put myself in. So looking for a secondary bounce off of this area, but this is a major profit-taking zone for the bonds on this drive down. Really, I mean, man alive, that was such a strong move lower. Oh man, the bonds are heavy right now. Over on the Thinkorswim side of things, we'll take a look at some stocks. Had some nice trades on the agricultural markets. Quick little scalp on soybeans. Had another one on feeder cattle. It was probably the fastest trade I think I've had probably over a year. If I look at the executed trades here, how fast was that? I had my sell order. It sold feeder cattle at 40 in 7 seconds, and it filled the target at 40 in 10 seconds. Fastest target available, fastest target NA, right? That was a really quick one. But looking at some of the charts that we've got going on here for the longer term, of course, our favorites. We'll take a look at Twitter. Twitter is seeing a potential, you know, they tried lifting it higher. They tried breaking above those highs, but they ran into a little bit of a problem. Nobody really wanted to stick the landing, if you will, and there's not really a whole lot of continuation, and now we're seeing a big bear engulfing bar. it's still in that situation where the sellers, I mean, if I were a seller and I saw this giant bull bar and then I see this, am I pumped? Probably not, right? I'm not looking at it thinking, oh man, I gotta sell the house and short Twitter. That's not the kind of candle that's really going to get a lot of people pumped up. And that's a good thing for buyers, especially because buyers are going to be looking for a reason to buy in, and buying below a bear bar, especially a really weak one, knowing that it's a terrible sell signal. What does that mean? Well, it means that it's probably a pretty good buy signal. So buyers will be building in underneath these lows, looking for a bounce back up over the coming days. Another major level of support is going to be at the base of this spike, right? This giant spike to the upside will likely find buyers wanting to come in and defend. So that area becomes a nice one right there. I didn't want that way over there. Let's do it this way. So that's going to be down at 29.43. So 29.43 on Twitter is a big, big area of interest, looking for them to want to retest those lows and bounce back higher if it even makes it that far. We know that buyers will be buying below that bear bar. They're probably going to be buying the low of this big bull breakout, and if it does go a little bit further, buying the gap fill down there as well. So a lot of areas of support underneath Twitter. I don't necessarily think the sellers are done per se. Really depends on how this candle closes. But at the same time, we also know that buyers will be building into positions. One of the other ones, we were talking about Boeing and wanting to see what they wanted to kind of catch and get going here. Still not really seeing a whole lot of follow through. We had that nice bounce off of 317.39, and it is kind of pushing, but we're just getting stuck. It's still really, really grindy inside of here. Every time something tries to get going, nothing really happens, right? So we're just kind of waiting for something to happen. Primary objective on Boeing is back up towards, you know, around 353, 354. Would love to see it back up into the 370s or higher, but you know, for the most part, off of 317.39, it's up almost, you know, a little over $20. It's hard to be upset by that kind of move. So gorgeous rally up. I would just like to see a little bit more of something, right? Give us something to work with so that we can, you know, get something going. Well, we'll see. We'll give it some time. Over on MasterCard, not really getting any of the follow through. It's already met the objective area that we were looking at back up towards 180. It missed it again by about 20 cents. It's one of those close enough scenarios. So there will be some profit taking up here. Primary objective back up to 183.73, preferably up to 184 or higher. Everything is still looking really, really good here on MasterCard. On Tesla, TSLA, really... The big thing here is what we've been talking about for the past couple days. We need to see them follow through and give us something to work with. Is this a spike, ledge, and collapse, or is this a spike, pennant, failed breakout, and continuation up? That's really what we need to see. This bear bar down here doesn't prove anything to me. This bull bar here doesn't prove anything to me. We need something better, right? Give me a strong bull bar. Give me something to work with that doesn't look like crap, and we might have something to kind of work off of. For right now, though, Boeing needs a little bit of info. There's a lot of sitting on hands right now when it comes to these some of these stocks. It's just you got to wait until they give you something to work with. Unfortunately, that's the case for Tesla, along with MasterCard and some of the other ones. Now, what was the... There was one big mover today. I mean, there's always a lot of big movers, but there was one specifically. What was it? Oh, LUV. Yeah, LUV. Southwest Airlines pushing back against that rally higher. This makes a lot more sense. You know, we were talking yesterday on how Southwest Airlines was catching a technical trap on the lows and then a big old rally to the upside in lieu of hugely bearish news. Like I mean, your airline just killed somebody. Why is this going up? You know, and it didn't make any sense. And I think, you know, at the time yesterday we were talking about how this might be a reason for sellers to sell into this with the assumption that this is just a false break move higher before a fundamental drop, and that's what we're seeing today. The fundamentals are starting to kick back in. And we're starting to see them roll back over. So this was a nice opportunity for sellers to come in and try to, well, they woke up to a little bit of a gap down and now a beautiful run lower. It's sitting last price at 54.75. It opened up at 55.66, so just a beautiful drop down there on Southwest Airlines. Hard to be upset with that one. And again, this makes more sense. You know, a big accident happened. Somebody died. A very unfortunate event. Why is it catching a rally, right? And well, obviously that was nothing more than a fake push high so they could sell into it. Makes a lot of sense now. Looking over at some of the other ones, of course, Facebook, just seeing if they're seeing what's going on there. Still not very interested in doing anything with Facebook personally. I don't like messing around with stuff when there's a bunch of fundamentals going on. But Facebook is relatively stagnant, not doing a whole lot. So nothing really to worry about there, but the only reason I'm looking at that is Facebook in comparison to Twitter. Twitter did see some sympathy selling along with Facebook to the downside, so if Facebook starts catching an ask and really starts falling, we might see Twitter follow along with that, which obviously I would not want to see. I want to see Twitter keep going up. Of course, U.S. Steel with all this tariff talk stuff. We are finally getting a little bit of a bull bounce to the upside. Really nasty in here for the better part of a month. It's just not much going on, right? Lots of back and forth, lots of chop and slop, and nothing really happening. One key area for me at least on United States Steel is going to be a retest of that big bear drop, right? That big bear drop coming in at 38.20. We are finding resistance off of that. Now it's time for the sellers, if they are going to continue this drive lower, to push down off of that area and drive down to at least 34s, preferably a little bit further. Obviously, this has been in a bull trend since mid-2017 or so, and it hasn't really stopped going up. Had a little bit of a blow-off on the highs after a deep correction, and now it's a pretty good opportunity for the sellers to try to push the market back down once again. What I would really like to see, honestly, is a dip below that previous swing down into the 30s. Even into the 29s would be awesome to see a little bit more pressure to the downside for buyers to get some better pricing. So that's all of them that I really have so far. The markets have been kind of calm and quiet going into the afternoon session, or at least the stocks have been. So if there are any markets that you want me to take a look at, feel free to type those in. Otherwise, we will we'll start wrapping it up. Apple, I mean, it had a gap down, but that's really about it. So there's not really much to worry about today in terms of overall movement. There were a couple big movers. You can see my morning watch list is relatively sparse today. We were looking at two big ones. One of the big ones was DXR. DXR had just a ludicrous amount of pre-market volume. I mean, look at this rally up. Doesn't look like it's that good. I mean, it looks like a nice strong rally, but look at the price on the right. This is 20 cents. 20 cents, right? 20 cents. That's a huge move for a $10 stock. That's insane. So that we were watching that in the morning, but as soon as the market opened up, it trapped above the pre-market high and then just went collapsing to the downside. Just monstrous bearishness coming in on DXR. It looked like it might have been a good setup, but as soon as the open hit, it just gave up the ghost and went crashing down. Another one was HMNY. Helios and Matheson has a bunch of news going on. I was looking to short it, but there were no available shares to short. So, beautiful move to the downside, looking for a little continuation. It would have worked out beautifully, but unfortunately for me, no shares. And I mean, you could probably guess that with the hard to borrow tag at the top there. Let's see, take a look at LE. Yeah, no problem. Live cattle is coming off of the highs, just like we were talking about. I really wanted to see this go a little bit further up. I wanted to see them start pushing into some of these other areas of resistance, but obviously these sellers have some control, and they are pushing the market back down pretty aggressively. Now, live cattle this morning had some very interesting movement where, the pre-market obviously went smashing lower, but they caught a heavy correction into it before continuing back down. We have been seeing that a lot more lately, where you'll have a unidirectional move and they'll correct deep into that move before seeing continuation, and that's the same thing that we saw here. If we go back historically speaking, we had we had another one of those over here where we had a really strong rally up, a deep correction, and this one actually failed and didn't get going until the next day. So it is very common lately on cattle with all this back and forth. And today was no exception. Just went pushing back down to the lows. And feeder cattle, of course, followed along with that. With probably the fastest trade I've had all year, was about 3 seconds in that one, on that little correction up, looking for the trapping on the highs. Sellers building in above these highs, assuming that they're going to get a quick push down, and they eventually did end up driving down really aggressively, and now we're at new lows again. So some heavy bearishness coming in over on the meat markets. On the bigger picture, looking at cattle, it really just kind of comes back to the same thing we've been talking about for a while, is that there's a lot of weakness here. The sellers are looking to fade the highs, and the buyers, well, they were looking to fade the lows. So far, they've been fading it really well. So the next area, if cattle does end up driving down, is going to be at a new low. Buyers will be there, both sellers taking profit and new buyers looking to fade the move. Excuse me. Looking to fade the move and bounce it right back up again. So I think cattle does have a lot of bear pressure, but with this big of a bear bar, when you're in a range and you see a huge bar, a lot of times the markets fade those kinds of moves because nobody believes they're going to stick around. So if we do end up closing this candle here in the next half hour, 45 minutes actually, on cattle, we could be seeing a little bit of a sideways to bullish day tomorrow, going into, well, tomorrow's session at least. And after that, it might just continue back down to a new low. Looking good, though. Looking good. Would you look at the 6J, please? Sure. 6J. So the yen, it's one of those situations on the yen where not much is happening. There's a lot of stagnation going on. We have that nice rally that kind of kicked off at the beginning of the year, or late actually in October. Started rallying higher really nicely. I mean, you can see just a beautiful channel to the upside. But they started missing the highs, right? Starting to see some weakness, and then they really start missing the highs. And a lot of time when you have that type of channel, that really nice looking channel to the upside, and you end up getting a situation where they start missing it, right? And then they miss it a little bit more, and then they miss it, and they just keep missing those highs. They're not getting that full cycle anymore from channel low to channel high. That's showing some signs that buyers might start, they might be losing a little bit of confidence on the upswing. Sellers will be coming in at the highs in those kinds of formations, and they're looking for likely a type of heavier correction. And a lot of times that correction is measurable. So if you measure up the channel, you can measure how much they missed the high by, and then you can drop that down and look for support in an equidistant amount. And you can see they did bounce there for a little bit, a couple days worth of bouncing, before it finally started giving up. Now, I say giving up loosely, because I can't really say this is giving up. It's not like there was a giant bear spike to the downside. We're just in a situation where not much is going on. This looks to me like they had a spike down. We're in a little bit of a spike and wedge. Now we need to just break out of this. If we can get a strong bull bar closing up, then we likely have a good shot at continuation to the upside, breaking out above new highs and seeing more continuation higher. But for right now, the yen, or specifically the yen futures, the 6J, definitely having a little bit of a hard time here. Stuck in a spike down in a wedge, descending wedge, after a really strong rally up. I have to assume buyers are here. It's just a matter of where. Previous swing low, looks like they're defending it so far. Next swing low after that, maybe the next one after that, maybe a retest of the swing high. There's so many levels of support on the way down that any dip lower, I just have to assume is being accumulated, and that would make sense given all of this chop and slop that we're seeing right now. So I think the safest approach, the most conservative approach, would be waiting for a strong breakout of the descending pennant that we have here to show some proof that buyers are coming in. The aggressive side of things, though, buyers will be buying in off of all of these swing lows, off of a 50% pullback, a 38.2, you name it, any reason to buy, they're likely going to be buying there. Another area would be looking at the inverse of this final spike, right? You see that final leg to the upside? Taking that measurement and dragging it down would give you an area of interest as well. Right around, I mean, just eyeballing it, but right around 93. Right, in that area. And then second question, could you play feeder cattle on NinjaTrader without paying other exchange fees? That's a really good question. Honestly, I am not 100% sure. I trade all of the ags and the grains and cattle and meats and all that on Thinkorswim, which I mean, most of the fees are relatively spelled out for you. For NinjaTrader, being that it's a discount brokerage, their commissions can be really weird, and they can be different for each person. So the best way to kind of double check what your personal commission rates are would be just getting in touch with NinjaTrader. Their support email is support@ninjatrader.com, and you can ask them there just to be 100% sure. But, aside from that, you're always going to pay some form of an exchange fee, whether, it's from the ICE exchange, the New York Stock Exchange, doesn't matter. You're always going to pay an exchange fee. It just depends on how much. But if you send them an email, they'll be able to give you a specific number that's personal to you. Because again, I mean, sometimes everybody's commissions is a little bit different. Might not be a bad idea to send them an email. Just to be safe, at least. Do a final call for questions, and then we'll wrap it up. pretty good day of trading overall. You know, for the most part, there's not really much that I'm waiting for at this point in time. I'm just kind of waiting to see what, you know, how these markets want to end up. Feeder cattle and, I mean, meats as a whole are relatively bearish, driving lower. Even hogs are catching a nice drop to the downside. That symbol HE. Everything's pretty sideways, though. So a little bit choppy, sloppy on the ags and the meats. At least the S&P and some of those index markets are catching some movement. So if one's not moving, usually the other one is. That's a good thing. That's why I trade so many markets. Eventually we'll find one that's moving. Getting a little bit of a bull spike here on OPGN. OPGN with a, I mean, it's a halfway decent lift to the upside there. Quick spike up and now kind of pushing back down again. All right. Well, I'm not seeing any other questions coming in. Not a problem there. Pretty good day overall. Like I said, certainly not going to be upset with a couple trades, and especially when they all work. That's even better, right? So as always, you know, before you trade any market, you always need to make a plan, trade the plan, follow those rules, and you'll be a-okay. Aside from that, though, you know, like I said, there's not really much that I'm looking for at the moment. Just kind of waiting for a little more info. Most of the markets that I like trading, the ags and the meats and all of those, are kind of sideways right now. And the ones that are moving have already moved a lot. They're probably going to slow down quite a bit going into the end of the day. Oh well, right? So underneath the video, of course, click the subscribe button, click the little notification bell icon so you know every time we go live on YouTube. We go live Monday through Thursday, every day at 1 p.m. Of course, Friday doesn't make much sense since we're going into the weekend, but we'll be back on Monday. So aside from that, enjoy tomorrow's trading. Hopefully you have a good trading day going into tomorrow, and hopefully you have a great weekend. But overall, yeah, we'll wrap it up there. So if I missed any of your questions, feel free to send me an email. Otherwise, we will see you all on Monday. Have a good one.